Right now, as we speak, the STRV 500 ETF, trading under the ticker STRV, is changing hands at $43.28. We are seeing a solid push in today's session, with the fund trading up approximately 0.65% intraday. The market opened at $43.23, dipped slightly to a low of $43.21, and has since found its footing, climbing to a high of $43.34. This price action isn't just a random blip, it tracks a broader, concerted effort by the bulls to reclaim momentum in the large-cap space, specifically driven by the heavyweights that dominate this index. The volume is building, currently sitting around 23,000 shares traded, which is typical for this time of the morning, but signals that the smart money is awake and allocating capital. You probably clicked on this expecting a standard breakdown of another S&P 500 alternative, perhaps thinking this is just a vanilla index fund with a slightly different marketing wrapper. That is the expectation, a passive vehicle for passive investors. But the reality is far more aggressive. You're not just looking at a basket of 500 stocks, you are looking at the tip of the spear in a corporate governance war that is quietly reshaping how American capitalism functions. While most funds from giants like Fidelity or BlackRock might use their voting power to push environmental or social agendas, STRV's mandate is radically different, strictly maximizing shareholder value, often by opposing those very same agendas. This creates a fascinating tension. The price of STRV tracks the market, but the value proposition is political and philosophical insulation. If you believe the market is efficient, but corporate boardrooms are distracted, this is the divergence you need to understand. Let's get into the immediate market mechanics driving STRV today. Because this ETF tracks the selective GBS United States 500 index, its movement is inextricably linked to the performance of the Magnificent Seven and the broader tech sector. Today's green candle is largely a derivative of strength in NVIDIA stock and Apple stock, which arguably do the heavy lifting for this index. When we look at the intraday chart, that bounce off the $43.21 level corresponds almost perfectly with a surge in semiconductor buying we saw earlier this morning. The market is currently digesting mixed signals. On one hand, we have robust earnings data coming out of the tech sector, and on the other, there is a lingering fear regarding Federal Reserve rate policy. STRV sits right in the crossfire. When you engage in online investing, particularly through a self-investing lens, you have to look at the sector weightings. STRV is heavily exposed to information technology, which makes up nearly 30% of the portfolio. This morning, we are seeing a rotation back into growth after a few days of hesitation. Institutional algorithms are hitting the buy button on large-cap tech, and that is lifting STRV. However, unlike a pure tech fund, STRV has a significant hedge through its energy holdings. Energy stocks are trading flat to slightly up today, providing a ballast that keeps the ETF from fluctuating as violently as a pure NASDAQ tracker. This is the core appeal. You get the beta of the S&P 500, but with a manager that effectively promises to vote against policies that might hamstring those energy companies in the name of ESG, environmental, social, and governance criteria. This brings us to a critical distinction in the current landscape of investment help. If you were to use Schwab Intelligent Portfolios or a SoFi Robo-Advisor, you are often placed into standard, low-cost index funds. These are fantastic products for what they are. But the STRV difference that we are seeing play out in the market sentiment today is about agency. Investors buying STRV at $43.28 are arguably paying a slightly higher expense ratio, 0.0545%, not for better financial returns than the S&P 500, since the holdings are nearly identical, but for the voice in the boardroom. We are seeing a surge in volume today that suggests retail investors are becoming more ideologically driven in their individual brokerage accounts. They're not just parking cash, they're voting with their dollars. Let's talk about the flow of funds we are seeing right now. Comparing STRV to Robinhood Investments data or activity on interactive brokers, we see that retail sentiment is shifting toward anti-woke assets, or excellence-driven assets, particularly as the political climate in the U.S. heats up. The recent merger news involving STRV's parent company, which we will get to in a moment, has acted as a massive beacon, drawing attention to the ETF. When a management firm makes headlines, its funds often see a sympathy inflow, and that appears to be happening today. The bid-ask spread on STRV is tightening, indicating healthy liquidity, which is crucial if you are executing trades on a Fidelity trading platform or Webull. You don't want to get hit with slippage, and today, the market makers are keeping things efficient. Now, looking deeper at the intraday technicals, STRV broke above its volume-weighted average price around 10 a.m., which is a bullish signal for day traders. If it can hold the $43.30 level, we might see a push towards the 52-week highs of $44.65 in the coming sessions. The RSI on the hourly chart is hovering around 55, neither overbought nor oversold. This implies there is still plenty of room for the stock to run if the broader market tailwinds persist. If you are watching Tesla stock, notice how its volatility often ripples into ETFs like this. Today, Tesla is showing strength, and that acts as a psychological buoy for the entire complex. But here is where we need to peel back the layers. What is STRV really? You might know it as the firm co-founded by Vivek Ramaswamy, but the company has evolved significantly. STRV Asset Management's core business model is offering index funds that track standard indices but vote yes on maximizing profits and no on political or social proposals that they deem non-pecuniary. They argue that Fidelity Investments or BlackRock breach their fiduciary duty by prioritizing stakeholder capitalism over shareholder capitalism. For example, if Chevron has a shareholder proposal to cut emissions by reducing drilling, BlackRock might vote yes to align with global climate goals. STRV would vote no, arguing that Chevron's job is to drill for oil and make money for you, the shareholder. This philosophy has found a home in the portfolios of millions of Americans who feel alienated by corporate America's cultural pivots. It's a brilliant counterpositioning strategy. By essentially selling the S&P 500 via STRV, but changing the governance layer, they have commoditized the anti-ESG sentiment. And it's working. The assets under management, AUM, have grown, and the firm has expanded its lineup to include energy, DRLL, and semiconductor, SHOC, ETFs. When you log into your Fidelity IRAs or your Interactive Brokers account to buy STRV, you're buying a standard financial product wrapped in a very specific political philosophy. However, the reality aspect of our framework recently got a massive injection of adrenaline that most passive investors missed. STRV Enterprises, the parent company, recently completed a merger with a public entity, Asset Entities, ticker ASST, and announced a pivot that sounds eerily familiar to anyone watching MicroStrategy. They're building a Bitcoin treasury. This is the curveball I mentioned earlier. While STRV, the ETF, holds stocks like Apple and Microsoft, the firm managing your money is betting its corporate balance sheet on Bitcoin. This signals a hard money ethos that goes beyond just voting against ESG. It suggests a belief that the US dollar itself is being debased and that excellence capitalism includes opting out of the fiat monetary system for their own reserves. This is a critical connection to make. The strength of the management firm often dictates the longevity of the ETF. If the parent company becomes a financial fortress through a successful Bitcoin strategy, it validates the contrarian brand. It tells the market, we don't just talk about doing things differently, we put our capital where our mouth is. For an investor using SoFi Active Investing or browsing investing sites, this adds a layer of intrigue. You're not just buying an index, you are aligning with a firm that is positioning itself as a future-forward, sovereign-minded asset manager. Let's look at the macro picture affecting STRV today. The Federal Reserve is walking a tightrope. Inflation data has been sticky, hovering above the 2% target. This hurts the valuations of the growth stocks inside STRV. When rates stay high, the future cash flows of companies like Amazon or Alphabet are discounted more heavily. This is basic finance. However, the economy has remained resilient. The soft landing narrative is currently winning. This expectation of stability is what keeps STRV trading near its all-time highs. If we were entering a recession, you would see a rotation out of this fund and into consumer staples or utilities. Instead, the money is flowing in. We also have to discuss the energy component again.